Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Australia considers tougher gun laws after 16 people die following the country's worst ever terror attack. The gunman targeted members of the Jewish community as they celebrated Hanukkah on Bondi Beach. President Zelensky suggests Ukraine could drop its bid for NATO membership in return for Western security guarantees. He's set to meet European leaders today for a major summit. Plus, US and European futures gain ahead of this week's final central bank decisions of the year. So to the markets after a pretty significant sell-off on Wall Street on Friday. The handoff is there for Asian markets, and you're seeing a similar sell-off. You're seeing similar pressure, certainly when it comes to the likes of the Kospi 100. We'll check in on that shortly, the Kospi index and the read across to Asia after, again, the Nasdaq 100 closed lower by close to 2% by Friday. Today, European futures, though, on the front foot after the concerns again about the earnings story and valuations around mega-cap tech. European futures pointing high by 0.4% after a week where essentially European markets ended flat. FTSE 100 futures here in the UK looking to add 35 points. We have, of course, the Bank of England decision on Thursday. Markets pricing in a 25 basis point cut from the BOE, but splits as well expected amongst members of the MPC. S&P E-minis then, after the weakness on Friday, pointing higher, modestly so, by 0.3%. Nasdaq 100 futures looking to add 53 points. Let's flip the board and have a look cross-asset. We're looking, of course, at a major week, not just central bank action, but data as well from the US in terms of employment numbers and inflation data that could give more of a steer in terms of what to expect in 2026, as the debate certainly remains pretty pronounced amongst members of the FOMC and Fed officials in terms of the direction of travel. 4.17 right now on the benchmark US 10-year. Euro dollar at 1.17, a little softer by 0.1%. Brent crude at $61 a barrel, higher on oil by 0.4%, and a fifth straight day of gains, set for a fifth straight day of gains for gold, above 4,300, 4,343 on the yellow metal, up more than 1% so far in the session. Now, Australia is in mourning after 16 people were killed, including one shooter in the country's worst terrorist attack. Gunmen opened fire on people attending celebrations marking the first day of the Jewish festival of Hanukkah on Sydney's iconic Bondi Beach. Prime Minister Anthony Albanese called the shooting an act of pure evil and said the government would take any action needed to tighten gun laws.
The government is prepared to take whatever action is necessary. Included in that is the need for tougher gun laws. And this afternoon at 4 o'clock, I will put on the agenda of the National Cabinet.
Well, let's bring in Bloomberg's Swati Pandey. Swati, bring us up to date then with the latest developments.
As we speak, Tom, the Prime Minister is in the National Cabinet meeting. We are not sure when it will wrap up. And as we just heard from the Prime Minister, he is going to put the gun laws on agenda. It is quite likely that the tougher laws will come to pass because it kind of has a strong bipartisan support in the country. Now, internationally, a lot of people believe that it's illegal to hold firearm in Australia. It's not. It's just really difficult, and the government is going to make it even more difficult and put further restrictions on civilians holding these firearms. And there have been 16 people who have been killed, including one of the gunmen. Two people were involved in this incident, two gunmen, and the police had earlier said there could be a third one, but they are not investigating the third person. There's no indication that there was a third person. In fact, so these are the top kind of things that right now we are looking at. There are almost 40 people injured in hospital, so the death toll could well rise from here as well.
OK, and as the Prime Minister, of course, of Australia pledges tougher gun laws, we have his counterpart in Israel, Benjamin Netanyahu, with some scathing comments about Israel, about, of course, Australia's response to what he describes as rampant anti-Semitism in that country, and as the Israeli leader describes it, the failure to act on warnings. There was also pretty remarkable footage, of course, of a bystander being hailed as a hero after tackling one of the gunmen. What more do we know about this?
Yes, that has actually been a bright light or a silver lining, if you like, in this really dark moment. And Australians have come together to celebrate this hero. In fact, there is a GoFundMe page after Bill Ackman, the billionaire, posted on X that there should be some sort of award that should be given to community heroes. And he himself donated $99,000 to this GoFundMe page, which has received more than $750,000 so far. Donald Trump hailed the man as well, who has been identified as Ahmad Al-Ahmad, a 43-year-old tobacco shop owner who was crouched behind a parked car yesterday when one of the gunmen was under a tree shooting, and he came from behind and grabbed the gunman, tackled him and disarmed him, and he took 2 shots himself while he was doing that. He's in hospital currently getting treatment. Hopefully he should be fine. And the New South Wales Premier Chris Minns said that without his help there could have been more lives lost. So clearly he's been celebrated as a hero in the community, and rightly so.
OK, Bloomberg's Swati Pandey, thank you very much indeed. And we're going to be following developments in Sydney, of course, and bringing you more updates throughout our programming here on Bloomberg TV. Meanwhile, in the US, police have detained a person of interest after a shooting at Brown University in which 2 people were killed and 9 were wounded. All students have been sent home and final exams have been called off in the wake of the shooting, which happened in a classroom in the engineering building on Saturday. To Ukraine now, where President Volodymyr Zelenskiy has signalled that Kyiv could accept security guarantees from the US and Europe in place of its long-term goal of joining NATO. Let's bring in Bloomberg's chief Europe correspondent, Oliver Crook, with the latest then. Ollie, walk us through what we've been hearing from Zelensky vis-à-vis its NATO ambitions.
Yeah, and that follows a meeting that we had yesterday in Berlin with Steve Witkoff, Jared Kushner, Volodymyr Zelenskiy, Friedrich Merz. We understand those talks will continue into today with a number of other European leaders also joining. But, Tom, what we're getting to is this word, NATO. And NATO is a fundamental premise on both sides of this war. For the Ukrainians, of course, its membership is seen as really one of the only ways that it can effectively deter Russian invasion. That's why, Ukraine has for a very long time wanted to join NATO. And it is seen from the other side by Vladimir Putin, the president of the Russian Federation, as one of these so-called sort of instigating reasons that the war began, because of his perception and his idea that NATO is not really, strictly speaking, a defensive alliance, but something that is seeking to encroach further and further upon Russia. So the question is there a way to sort of split that in the negotiations to provide the Ukrainians with the kinds of security guarantees, the Article 5-like or Article 5 light guarantees backed by the United States, backed by the Europeans, while also reassuring to some degree the Russians that this is not in fact a sort of NATO expansion. For the Ukrainians, this is obviously giving something up because this is in some ways curtailing their own sovereignty. It's basically accepting from the externality what sort of alliances they can join. Obviously, from the Russians, there's a question of whether this would go sort of far enough in reassuring them that this would sort of diminish the so-called root causes that the Russians have identified, this NATO membership. So I think that, again, with all of these negotiations, these are sort of forward progress potentially. That being said, we have not heard from the Russians in quite a long time about this negotiation process and how they feel about the now 20-point plan. But that is the conversation that we get going into this week, and as we expect more discussions to happen in Berlin today.
Yeah, and Ollie, as you well know, of course, and it's going to be keeping you busy through the week, a major week for European leaders, this final week of the year, final full week of the year at least. Other European leaders then, Ollie, are set to join these talks later today. What are you going to be watching for there?
Yeah, so we'll have about 10 European leaders. We're also going to have Ursula von der Leyen will be in attendance. Mark Rutte, the Secretary General of NATO, will also be in attendance. And, those discussions about the peace plan will be front and center. But as you allude to, Tom, later in the week is, I think, one of the most fundamental questions here for European leaders. The will they or won't they on the Russian assets, the big question about whether or not the European Union and its member states will seize or in some way try to monetize those Russian assets to try to fund Ukraine into the years to come. That 90 billion euros worth of loans that they're supposed to be presenting to the Ukrainians, which found also some more resistance just before the weekend, Tom. We understand that now Italy and Bulgaria and Malta have written a letter to the European Commission to suggest finding alternative routes of funding for the Ukrainians other than the Russian assets. So you take one step forward by sort of having the sort of legislative change that we had on Friday that basically cuts out Hungary, while taking one step back by getting resistance from the other leaders. What we'll find out today, Tom, is if the year of sort of geopolitical humiliation for the Europeans continues by another failure of them to assert themselves on this issue.
OK, Bloomberg's chief Europe correspondent Oliver Crook in Brussels. Ollie, thank you for that update. Let's cross over to Asia right now. Check in on the Asian markets. Winnie Su standing by in Tokyo with a view on what's happening. It's a pretty tough session so far in Asia.
Yes, exactly. Morning, Tom. You are seeing Asian stocks under a bit of a pressure today, mainly tracking losses from the U.S. session. However, it is still those concerns around the AI investment and the CAPEX, and especially after we've got that Broadcom's disappointing earnings. So hence, technology shares really leading losses today in Asia. You can see that the tech-heavy indexes in South Korea, in Taiwan, leading losses. And HSCEI here also holding on to its losses, down about 1.6% after we got that latest set of data from China. Also still seeing weakness in the economy. As we flip the board and take a look at the breakdown of these data, you can see on the board that we're going to have the set of data that we saw coming out of China. The data include the retail sales and the industrial investments. And here you can see really weakness across the board. However, the highlight here is the retail sales number up just 1.3% year over year. And that came below an estimate of about 2.9%. And yes, it's dragged by the disappointment when it comes to the car sales and also home appliances. So it shows still how the weakness in the economy remains. And the debate here is how far the government is willing to go when it comes to the stimulus boost. And the views are quite divided right now. And hence, we're seeing a bit of a fluctuation when it comes to the bond and the stock market in terms of its reaction. Now, flip the board and just take a quick look at what's going on in the Japanese market, because we are seeing still the topics outperforming the Nikkei here. And it goes to show how expectation is still being baked in when it comes to the rate hike expected from the Bank of Japan later this week. And hence, still seeing bank shares really leading gains there. And adding to that expectation, we've also got the Tankan data showing that there is an improvement when it comes to factory investment, and hence still seeing a bit of a strengthening when it comes to the Japanese yen, still around that 155 level against the dollar. But that Bank of Japan's tone later this week will be something that we will pay a very close eye on. Back to you, Tom.
OK. Japanese financials getting a lift on expectations of higher rates out of Japan. Winnie Su in Tokyo. Winnie, thank you very much indeed. Here's what else to think about through this week then. On Tuesday, we do get the delayed US jobs report. So we'll get the details there, the unemployment number and the overall non-farm payrolls, both for October and November as a result of that government shutdown. So a bit more clarity in terms of the health of the labour market, what that could mean for the Fed, of course. On Thursday, we do have the decisions from the Bank of England, expected to cut interest rates by 25 basis points. The ECB is expected to hold rates, of course. And on Friday, as when you were saying, the BOJ, seen by most market watchers moving rates higher to 0.75% on Friday. So that's another one to watch on the central bank watch, of course. A big week, a major week for global central banks, the BOE, the ECB and the BOJ at the end of the week. You can get a roundup of the stories you need to know, of course, to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Of course, all of the reporting around that terror attack in Australia is taking up, of course, a lot of the analysis and a lot of the focus. Coming up, switching focus because the favourite to become the next Fed chair pledges to maintain the central bank's independence. More on Kevin Hassett's comments and the market implications next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the front runner to become the next chair of the Federal Reserve has said he would consider President Trump's policy opinions if picked, but the Fed's interest rate decisions would remain independent. Kevin Hassett speaking after the US president said he should be able to make recommendations on Fed rates policy.
I think he has very strong and well-founded views about what we ought to do. But in the end, the job of the Fed is to be independent and to work with the group of people that are on the Board of Governors at the FOMC to drive a group consensus on where interest rates should be. And to do so, basically with the guidance of the Fed chair. But in the end, it's a committee that votes.
OK, let's bring in Bloomberg's Valerie Teitel on what we've been hearing from Fed officials. Kevin Hassett, front and centre, not a Fed official yet, but of course we expect to be in pole position, though the president hasn't completely made up his mind. It seems that there is another contender.
Yeah, it does seem like the two Kevins, at least, are back under our focus. We had some reporting from the Wall Street Journal on Friday that it's both Kevin Hassett and Kevin Warsh that are still being considered. And this comes after reports that he did some final round interviews last week, both of which candidates were taking, both of those interviews were taking place with these candidates. Now, if we look at what's going on in poly market, this is the prediction market, we are seeing a similar conundrum happen where Kevin Hassett was almost a done deal 2 weeks ago, odds around 85%. That's now moved down to 50-50, and Kevin Warsh has moved up in the odds to around 41%. So it does look like the two Kevins we're still focused on. Now, the reasons why perhaps there's been a big shift away from Kevin Hassett recently, obviously, it's unknown. Maybe President Trump had just not made up his mind. But perhaps there also was some backlash from Republican leaders in the Senate, perhaps from market participants as well, about how close Kevin Hassett is to the U.S. president. You just heard him there speaking to the media, saying what he has said a lot previously, which is that the Fed's role is to be independent. But I think it does worry some just how close Kevin Hassett is to Trump, the economic agenda, and the administration. Kevin Warsh is someone who's maybe does have the dovish framework that Kevin Hassett does, but a bit more removed from the White House and from the administration. The one thing they do differ on, which I'm not sure if is going to become a contentious point going forward, but Kevin Warsh has been very critical of the Fed's use of their balance sheet, of quantitative easing, essentially, which is something that Scott Bessent, the Treasury Secretary, he does share that kind of criticism of the Fed, but that's a more hawkish-leaning idea, essentially of a Fed wanting to unwind its balance sheet aggressively, maybe not use QE as a policy tool moving forward. That's really where they differ. But in the grand scheme of things, I think what the Fed meeting showed us last week is that perhaps this new Fed chair pick isn't necessarily as important and as contentious as we could think. The Fed is still guiding for the fact that growth is going to be healthy next year, inflation is going to come back to target, and the momentum on interest rates is to continue cutting. So none of this is really butting heads with what the Trump administration wants. Yes, they obviously want rates cut a bit more rapidly, but it doesn't seem like we're entering a phase where we get a Republican and a Democratic camp at the Fed where that really butts heads in May when we get a new Fed chair.
Well, the other thing that I really want to get your view on is, with that backdrop, Val, is what out of the data sets that come through this week and the central bank decisions is going to be drawing most of your focus?
Look, I think non-farm payrolls is. I think the big focus of the Fed right now is the weakness of the labor market. And if that continues to accelerates in any way, I'm looking at the unemployment rate there because that's what Powell has driven a lot of our attention to. That could be a cause for concern for the Fed in cutting in January. Yes, we do get CPI as well on Thursday, but already we heard from Powell that a lot of this data could be distorted by the fact that we've skipped the month of October when it comes to many of the components collected for CPI. So November non-farm payrolls, especially an eye on the unemployment rate. Now, there is likely to also be distortion in the non-farm payroll report, too, Tom. We know from previous shutdowns that sometimes those furloughed government workers have responded to the survey that they're unemployed rather than still employed but furloughed, and that could cause some disruption to the unemployment rate. So still a lot of distortion in this week's data, but it is going to be heavily parsed over, and any shocks, I think, to the downside in the labor market could change the Fed pricing when it comes to January.
OK, great setup for the data, of course, and the central bank action of this week. Markets reporter Valerie Teitel. Valerie, thank you. Coming up, we're going to switch focus because there's a question about whether or not Europe's chemical industry can keep up with the pace of global rivals. We're going to be discussing that in depth with our chemicals analyst. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, China has built seven large petrochemical hubs over the last decade, raising fears of a deluge of exports and putting pressure on other producing nations already struggling with oversupply. China is by far the world's largest consumer of plastics, importing nearly 15 million tons of polyethylene last year, more than Europe's entire demand. Bloomberg's chemicals analyst Philip Hurst of BNF's oil team joins me now for a deep dive on this question and the global implications. Philip, you've been looking closely then at the threats facing Europe's chemical industry, including plastics. Tell us more about what you guys have been finding about what is developing in the sector and China's role.
Exactly. Thank you very much, Tom. So, like you already pointed out, what we're basically seeing, especially since 2018, 2019, is just way more capacity is being added globally than is needed. And as you also already pointed out, China has really been the principal driver of that. And I'm sure we're going to get into the why of that. But in very simple terms, we've just seen way more capacity being added in China, also accordingly globally, than is actually needed. And because chemical markets are globally interconnected, when China sees this major surge, that obviously has a big ripple effect across the entire world, including in Europe, with Europe being amongst the highest cost-producing regions. So that has a lot of implications for Europe's industry.
OK, so oversupply from China. This is something that we see in other sectors, of course. We're seeing it in the car industry now. We're seeing it, and we have seen it historically in things like solar panels and wind turbines as well. Why is China pushing so hard on the chemical sector?
Well, the why is obviously always speculative territory, but what we have seen over the past 15 years, if you look at China's polyethylene consumption in 2008, for example, China consumed about as much as Europe. Then fast forward 10 years to 2018, and we're talking about China consuming 4 times as much in Europe. So, in other words, extreme growth over this decade period. At the same time, capacity development has been a lot more sluggish over this period. So China became a huge import of chemicals, as you've pointed out. Then over the past 5 years, the role was actually flipped, where demand growth in China slowed down, but capacity growth has really surged. So in other words, we're seeing a development where China is probably trying to really cut down on its import needs.
What does this mean for European companies and their ability to fend off this competitive challenge then?
So there are multiple implications there, and people often point toward margins as being one major area, obviously, because you have too much supply, too little demand, so margins go down. But another major implication is trade flows, because obviously, as China is a major importer, that also means you have large exporters to China. And the Middle East in particular is a major exporter of, let's say, polyethylene to China, a low-cost producer. Europe is a relatively high-cost producer. So as those volumes get freed up because China cuts its imports, the Middle East potentially could redirect a lot of those exports to Europe and push those high-cost producers out of the market.
OK, Philip, thank you very much indeed. Bloomberg NEF chemical analyst Philip Hurst. Coming up, our next guest on AI in 2026. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Australia considers tougher gun laws after 16 people die following the country's worst ever terror attack. The gunman targeting members of the Jewish community as they celebrated Hanukkah on Bondi Beach. President Zelensky suggests Ukraine could drop its bid for NATO membership in return for Western security guarantees. He's set to meet European leaders today for a major summit. Plus, US and European futures gain ahead of this week's final central bank decisions of the year. Let's get to the markets then. After a bruising day on Friday for Wall Street, with the Nasdaq 100 closing lower by 1.9% today, the futures picture is looking slightly brighter. European futures pointing higher by 0.3% after essentially a flat week for European stocks last week. FTSE 100 futures here in the UK looking to add 36 points. S&P E-minis pointing higher by 0.2%. Nasdaq 100 futures looking to gain 52 points, again after closing 1.9% lower on Friday. Let's flip the board and have a look cross-asset. The debate clearly amongst Fed officials continues around whether or not to emphasise and put the focus on inflation risks or jobs. And we'll get more data through the week that could clarify some of that out of the US on inflation and non-farm payrolls. Today, the US 10-year is yielding 4.17 on the benchmark US 10-year yield move of just 1 basis point. Euro-dollar at 117, $61 a barrel on Brent, higher by 0.6%. And gold on track for a fifth straight day of gains, up 1% for the yellow metal, above 4,300 per troy ounce. Let's get more details and more analysis across these markets, and bringing, at this point, Charo Chanana, Chief Investment Strategist at Saxo. Charo, good morning. Thank you for your time. I want to start with the data that we're expecting out of the US this week. Where is your focus going to be? Inflation data, non-farm payroll prints, backdated. What is going to be drawing your attention?
Hi, Tom. Thank you for having me back. Certainly, I think finally this is the week when we get all that lagging US data out of the box. And then I think still the problem here is that we still do not get the full picture, right? All of those surveys that did not happen for October will continue to bite us and create that data fog that we've already been suffering from. But if you look at it in terms of priority, I do think the jobs number is certainly a notch more important than the inflation print at this point, particularly because last week we heard from Jerome Powell, and he himself said that jobs data is looking much more of a priority at this point than the inflation metric. But having said that, also we saw that move higher in the long end yields last week, which continue again to put some light on the CPI data as well, even though, like I said, we wouldn't get the full picture. But I think if we do get a really hot CPI number, then the long end yields will continue to be a trouble for the markets, particularly the risk assets. But I think the first focus, certainly with Tuesday's non-farm payrolls, I think the market is expecting somewhere around a 50K number there. If we get something like that, I think that's a very Goldilocks situation. Anything positive, anything between 0 to 50, I think that adds to rate cut expectations. It could be slightly more positive for the equity markets, but anything in the negative territory, if we see net job losses, I think that really starts to be a little bit concerning. And then we come to the question whether bad data is really bad data for the markets.
That's a really important breakdown in terms of the potential scenarios, Charo. Really helpful, I think, in terms of how to frame the numbers that we'll be getting in terms of non-farm payrolls. Given, and of course, your view may change by the end of this week on that data. But as things stand, what is an appropriate number of cuts to be pricing in, do you think, for 2026 from this Federal Reserve?
I think the market's done a really good job there, pricing in 2 more rate cuts for next year. Like I said, right, I mean, it does look like the U.S. economy is weakening. We do not get enough, convincing data there because, again, it's a K-shaped economy. There is a part of that economy that continues to do well and drive those headline numbers and the optimism around that. But there is a section of the economy that is weakening and, demands lower rates as well. So I think with that in mind, but of course, at the same time, we have a very, very sticky inflation. I think we really need to watch going into next year. A few things. One, of course, how the fiscal situation turns up, to how the tariff impacts really come through, and this whole AI story, which has actually become the driving macro narrative right now, right? Where does that take the market and the economy as a whole as well? I think that is a huge question mark to really decide where the rates go as well. But for now, I think the market's thinking around 2 rate cuts is pretty prudent.
Okay. So 2 seems appropriate at this point. Charo, I want to get your take on AI. You touched on AI there. We heard from Ed Yardeni, of course, of Yardeni Research. We'll show the quote and see if you agree with this take. We view investors, says Ed Yardeni, we view investors' recent anxieties around AI as the indigestion phase of a massive technological adoption cycle rather than the end of the story. Does that seem reasonable?
Absolutely. I think, when you look at it in terms of the AI implementation, say even in our daily lives, I would say we have a long way to go there, right? So a lot can happen, in terms of productivity boost and things, the way things work. And that really, can continue that AI narrative to be driven for a number of years from here. We're really in a cycle that's completely turning around, But I think the initial part of his comment and around the indigestion phase, I think that is a bigger problem for the markets right now. And that does mean that this indigestion transition phase could very well continue into 2026 as well, especially as, like we've seen last week itself, the question around AI earnings are getting harder for the companies. So the bar is, certainly setting much higher from here. Just an earnings beat is not enough for AI companies to be able to be seen as, good plays in that space. So a lot of questions around earnings, and then you add to that the valuation froth that we have and this push higher in long end yields, which also continues to probably demand some multiple compression here. So there are a lot of factors that, continue to put the focus on that AI bubble story into 2026 as well.
Tara, before we let you go, your favorite sector in Europe for 2026?
I would say, there's actually the Europe story is quite a bit interesting at this point, especially as flows are looking to move out of the US and go into some of the more value plays, and Europe offers plenty of them. But for me, I would say, I think defense looks still pretty interesting because there's potential for a pullback on these discussions we're having on Russia-Ukraine, but that does not mean that the defense spending for the European nations is going to pull back. We still have the NATO demanding higher defense spending from European nations, and that does mean this is a more structural multi-year theme rather than just being tactically focused on it.
Okay, Charuta Nana, Chief Investment Strategist at Saxo, always smart on these markets. We appreciate your time and your insights. Charuta, thank you. Right, let's update you on our top story, of course. Australia considering tougher gun laws after 15 people were killed in a terror attack on Bondi Beach. The total death toll is 16. One of the gunmen was also killed. A father and son have been identified as the attackers who targeted members of the Jewish community as they celebrated the start of Hanukkah on Sunday evening. It was the worst terrorist attack in Australia's history. A bystander who tackled one of the gunmen has been praised by leaders, including President Trump. He's been named by local media as Ahmed Al-Ahmed, a 43-year-old father of two. Here are live pictures right now from Sunday's shooting site as mourners gather in and close to Bondi Beach in Sydney, of course. Now to Hong Kong, where former Hong Kong media mogul Jimmy Lai has been found guilty of endangering national security in a landmark trial. It's a verdict that could fuel tensions between China and the US. Bloomberg's Min Lo sent this report from outside the court.
A marathon trial lasting 156 days has concluded, and the former media mogul Jimmy Lai has been convicted guilty of all charges, including 1 count of publishing seditious materials and 2 counts of colluding to conspire with foreign forces. The total verdict is over 850 pages long. The judges read a small portion of it, pointing to WhatsApp messages as evidence of his intent to collude with foreign forces to call for sanctions to be imposed on Hong Kong and China. They also found him guilty of using the now defunct newspaper Apple Daily as a platform to embark on this campaign to undermine the legitimacy or authority of Hong Kong and Beijing. Now, this is a closely watched trial. Scores of supporters queuing up overnight to enter the courthouse this morning. President Trump saying he raised the issue of Jimmy Lai's release with President Xi when the two men met at the sidelines of the APEC summit in South Korea in October, and White's group calling for his release on medical grounds as well. Jimmy Lai is 78 years old as he awaits his fate. The sentencing will be handed down on a later date, and he could face up to life in prison. Min Lo, Bloomberg News, Hong Kong.
Coming up, the CEO of PolyAI, a company building voice AI agents, joins us for an exclusive conversation as the firm announces its latest funding round. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, tech startup PolyAI has raised $86 million in Series D funding. The London-based company, which is backed by the likes of Nvidia, specializes in lifelike conversational AI voice agents and assistants. The CEO, Nicola Mrcic, is with me now for an exclusive conversation. Nicola, congratulations on the raise, $86 million. You're backed, as we said, by the likes of Nvidia, Cola Ventures, City Ventures, and many more. And your customers include the likes of Marriott and UniCredit, Caesars, PG&E. How are you looking to deploy this capital?
Yeah, so I mean, this round takes us to over $200 million of funding. And, you know, we build voice AI agents that are kind of like as good as your best human reps. So the goal for us is really just to continue to deliver on the ROI with all of these customers. You know, we handle things like medical transport. We talk to banks and their customers about fraudulent transactions. We handle hospital admissions. We handle really all sorts of things that you don't really think of AI as handling on regularly these days. We're seeing massive adoption, and we're looking to just really take that to a whole next new level. Our largest customers already do the work of well over 1,000 full-time employees.
Wow.
With AI. So individual customers, 1,000 people that they might not have been able to deploy at a peak time, or you know, when their systems goes down, calls about, say, you know, natural disasters.
These are complex questions then being put to your agents. So you're talking about things like healthcare, including sensitive data, but you're saying these agents are already as good as humans.
Yes, absolutely. So if an enterprise has what it takes to kind of like do these tasks autonomously with AI agents, we can do as well as humans. And the goal, again, is not to replace them. It's just to kind of like create like a real kind of like symbiosis where AI can do things that humans might not have time to do, or repetitive things, but even very, very complicated things. And a lot of times we've made humans follow such rigid instructions in the contact center that they've basically become bots themselves.
Because they're reading scripts.
They have to, right? Especially in these like financial services, healthcare, utilities, they have to follow these rules, at which point they're no better than technology. And at that point, you might as well automate.
There is still a big debate in terms of the return on investment around the AI theme, ROI. Do you have evidence that your systems and your product is delivering material return on investment for your clients and customers?
Absolutely. So I think, you know, broadly, when we look at the industry, we have to separate the huge CapEx investments made in the infra from kind of like enterprise applications. The truth is enterprise applications are newer. We're among the first to do it, and we're the first to reach this scale in our space, and it is one of the most important ones. When you look at the ROI, Forrester did a lot of analysis on our clients, and on average, we deliver about 10 million of value to our customers. We've got
is that
well
per
over
client on average?
Per client,
$10 million?
Yep. So when you look at like kind of like close to 150 of them that we have, that's almost $1.5 billion of value created for these customers. Now, it comes in a few different flavors. It's not just cost cutting. People often think just about cost cutting and replacing human labor. It's really about growing revenue as well. It's about improving customer experience. With UniCredit, we improved their NPS scores by 15 points. Now, we can debate what that's worth.
An NPS? Explain what an NPS score is.
Net Promoter Score. So that's basically an indicator of how well you're doing with your customers. Different companies have different equations for what 1 point is worth.
Customer satisfaction, to some extent.
Yeah, absolutely right.
When we talk about the progress of this technology, how deep is the moat for PolyAI versus the large language model labs as they continue to improve their offerings?
Yeah. There are a lot of layers of this technology. You know, we started this as a spin-out from Cambridge, where I did my PhD, met my co-founders. We worked on it for a long time. Nvidia just re-upped in this round, which kind of shows that we are their partner in terms of like the technically differentiated company in this space. We've built a stack for customer conversations because, you know, when people call customer service, they don't want to talk to ChatGPT that kind of just agrees with what they're saying and keeps going. They want precise answers, clear communication, human-like language. Not overly verbose. They didn't call you for a chat. They called you because their internet is not working. So we've got technology for that. Obviously, there are a lot of people working on this. So every mode is as good as the speed at which you roll out and continue to build. But we've got, I think, a pretty serious differentiation.
Trust and reliability is important in terms of these conversations. What have been some of the technological breakthroughs that have allowed you to develop voice agents that have true trust and reliability? Because you can have people interrupting, you can have accents, different tones, other noise interfering. What have been some of the breakthroughs that allowed you to get to where you are?
Absolutely. I mean, it's a game of inches. There's a lot to do here, right?
Yeah.
From kind of like dealing with the Glaswegian accent all the way, or Serbian one, all the way to kind of like, you know, having fluid communication, precise language, and also equally being able to know when you're not doing a good job and just kind of like deciding to hand off to a human then. You can only build trust if you're not forcing people into a self-service labyrinth. So it's not a story of full replacement, it's a story of augmenting heavily, but making sure that if you don't want to speak to me and AI, You go and you speak to Tom, the human agent, right? And in that, you kind of create this kind of like virtuous loop where it all just works.
Yeah.
So there's a lot of technical stuff, from kind of like speech recognition and dealing with the way that different people sound, to sounding great yourself, responding quickly, being interruptible. It's quite a triathlon of, you know, different technical tasks that you have to take care of.
Okay, a triathlon of different technical tasks. I like that framing. You said you're still seeing very, very strong growth. Can you give some numbers around that? As you look into 2026, do you have a target around ARR, annual recurring revenue, that you can detail for us? What are you looking at in terms of the growth?
Yeah, absolutely. Look, I mean, I think we ended last year just over 20 in ARR, and that's 15 million of GAAP revenue. So there's a lot of numbers being thrown around by companies that are not very inspired by actual audited data. This year, we're on track to at least double. Next year, again, the same. Now, there are a few kind of like interesting subparts of that. Doubling is okay, but it's not that glorious these days. America has tripled for us, and we'll probably do that again. So there is faster enterprise adoption there. It's now about 80% of our revenue, right? Now, when you look at healthcare in particular, we've nearly 5x'd the revenue in healthcare. It's now our largest vertical. So we're seeing massive appetite by healthcare, by America in particular, which is really driving our growth and the acceleration of our growth.
Help me square the circle on the jobs question, because you said your agents are now taking the place of about 1,000 workers, but you said you're not trying to replace workers. Are you sugarcoating the picture for us?
I'm really not. So here's the thing, right? If you're, say, this time of year, from Black Friday to Christmas, call a retailer, see how well you do, see how long it takes to get to an agent, right? So what typically happens pre-AI is that they'll go to the BPOs and say, hey, I am Carter's, I am Office Depot, I am Walmart. Can I have an extra 1,000 agents, 500 agents? And they all want them. They can't all have them. Or if they have them, well, they won't be the best agents and they won't have time to ramp. So your quality of service inevitably deteriorates, right? Like FedEx is one of our largest customers, and the volumes this time of year just spike. And it's unbelievable what you're seeing, right? So it's a problem that cannot be handled that easily by bringing in extra humans. So if you're able to provide this kind of like more elastic technological solution, then you've in practice giving them 1,000 extra people. And people like thinking about that. CFOs like thinking about these things and those metrics, because it's easy to justify what they pay us for that service.
Okay.
But really, the attrition in the average contact center is really high. We're talking about often north of 100%.
Wow.
Which means that basically most of the effort is expended on bringing new people in, spending a week or two training them up, only for them to quit 4 months later. So is there displacement? No, I think the future contact center probably has about 20% of the people today, but those people are better compensated, have more interesting jobs. This contact center becomes a command center where really they're knowledge workers. They're paid more, right? I see them as an air traffic control of a future. We call it the agentic enterprise, this thing that kind of like combines humans and AI to really know what's going on at all times. So if you get a spike of calls from Newcastle about billing issues, you know that there's a problem and you go fix it at root.
Yeah. Before we let you go, 80% of your revenue is coming from the US, you said, and you're at Series D in terms of funding. Do you IPO in the US?
Companies IPO much later in these journeys. The way it's looking, yes. I think that the center of mass is moving to the US for us at a pretty serious pace.
That's a loss for Europe, isn't it?
I think so.
Nicola, thank you very much.
Thank you for having me.
On your most recent raise and how you plan to deploy that. Nicola Merchich, CEO of PolyAI, and the growth they're seeing across that business. There's a lot more coming up. Stay with us. This is Bloomberg.
On net, I am still a little more concerned about labor market weakness than I am about upside risks to inflation. And that's partly because I see a decent chance that inflation will come down as we go through next year. I attribute most of the increases in goods inflation in 2025 to tariffs, and I expect the bulk of these effects to disappear by the middle of next year.
Philadelphia Fed President Anna Paulson speaking there. Here's the divergence then in terms of the dot plots. Post that meeting, of course, with the FOMC last week, 25 basis points is what's flagged from those forecasts in terms of the further rate move lower from the Federal Reserve next year, and the divergence versus the market pricing in terms of those overnight swaps still pricing in, traders still pricing in a little over 2 cuts by 2026, by the end of 2026. So there is that divergence, and we'll see if the data that comes through this week, whether it's inflation data out of the US, non-farm payrolls, closes that gap and leads to readjustments by the end of this week. Traders, interestingly, pricing the rates getting down stateside to around 3.1% by October of next year. We'll see if they are over their skis on that front. And the data this week could go some way to closing that gap or leading it to widen even further. Let's cross over and have a look at what is happening in terms of the non-farm payrolls picture then. We're going to get the data of October and November. The surveys are that for November, you're going to get a print of 50,000, unemployment at 4.5%. The labour market and the debate is there, certainly for FOMC officials. We've had that reinforced over the last few days in terms of Fed officials coming out and either emphasising their concerns about inflation that still remains stubbornly above that 2% target, of course, or the weakness in the labour market and how vulnerable the jobs picture in the US is. So we'll be getting that data, of course. There was a shutdown. It's been delayed. October and November, that data crossing Tuesday that will inform those views. Let's briefly flip on and have a look at what to expect from other central banks. We had the Fed decision, of course, last week. Now it's over to the BOE and the ECB on Thursday, and then the BOJ on Friday, moving in the opposite direction, certainly to the BOE. Here's the picture in terms of the Bank of England and its challenge around inflation. Inflation at 3.6% for the BOE. Rates are at 4%. The market's pricing in a move of 25 basis points lower to 3.75 on Thursday. Bailey has proven to be a swing vote on the MPC because the divisions are certainly there as well. So that's going to be a very, very intriguing decision from the Bank of England and whatever we hear from officials, of course, on Thursday. The ECB is expected to hold. The BOJ could move rates to 0.75%, up from 0.5% right now. That decision by the BOJ on Friday. Get all of the details, of course, on the Bloomberg terminal. The opening trade is next. This is Bloomberg.